organize. Today's meeting is organized by the YP Young Professional Committee in collaboration with the Student Listening Committee. And the topic for discussion is the from savings to securities. We're going to explore how young professionals can build wealth in the capital markets. So we've with time we've already gone through the value of SPE, and so we'll begin to start with this. So today's webinar is brought to you, like I said, by the YP and the Student Listening Committee. And for today's discussion, is going to move beyond basic savings to explore the strategies and then the mindset needed to acquire long-term wealth. It's actually introduced investment pathways that are available and how young professionals in the industry or wherever you find yourself can actually build sustainable wealth. So just by the way, we will go through the following outlines. So we will have a simple house rules. And before we even start, I can see that some of us are breaking the house rules. So by the time we lay down the, I'll expect that all of us will be in that. So after the house rule, we go through the SPE safe start, icebreaker session, then we have our open remarks. We introduce the speaker, then the speaker do the presentation for like 30 minutes. And then after the presentation, we're going to give chance for our participants to ask questions, and the answers shall be provided wherever possible by our speaker, which I'm sure he's ever ready for you. So get in touch with us through either chat or by the rules that will be given to you through the question and answer session. After this, we will have a feedback survey. A link will be shared in the chat box, and I expect that all of you with the feedback that can help us advance the programs actually give us some information, whether it's about the presentations, about upcoming events that you want us to organize or something you wish us being would have in mind or something. Then we will share our upcoming event as well with a vote of thanks. Thank you. So the simple rule for the house today is that if you are okay, so Kevin, please confirm if you can still hear me.
Yes, please, I can hear you.
Thank you. So just by the rules, and I'm sure these rules has been obvious because most of you join a lot of meetings, and but we just have to remind ourselves when you are not talking, mute your microphone. I can see that some are not muting their microphone. So Kevin, in case somebody is not muting their microphone, kindly, since I will not be having access to,
Let's check this one first. When she come back.
yeah, so all right. And then if you have any question, just raise your hand and we will attend to you. Or equally, you can share your questions in the chat box. So we have the SP Safe Start. So SP Safe Start is actually the time that is allocated by the Young Professional Committee for every webinar to share the safety awareness and to make sure that we increase the awareness of our safety in our daily lives. And today we will discuss about the situational awareness. So for the situational awareness, what we want to share with you today is that it is important that you avoid any testing or putting on sounds on your head when you are crossing road. We've received a lot of incidents, and you are aware how this thing has caused a lot of lives. And also, those of us that move from house to the workplace, to the market, or whatever that we go to, those places are places that we have to pay attention to with our gadgets, things that you don't want people to still take away from you. It is important that you take very, very, very attention to them. And then also, we ensure that cross roads and then the pedestrian roads are very, very checked and used appropriately. Do not always think that the crossroad or the crossway or the pedestrian is safe. Always pay attention to your surrounding. There are situations that people walk on the crossroad, the zebra crossing, and they think that cars should stop for them. Before they find themselves break out and those things, cars are failing brake and hits them. So once you work on it, your security is not 100% assured. Look out for yourself. This is something that the YP want to share with you today. Obviously, we increase the awareness of this situation. All right. So the next on our list is our icebreaker, something interesting, and I'm sure that you would love to see it. So from here, I'll invite our brother Kevin Ariapo to take over from here. So Kevin, if you are there, kindly take over from me and give us the icebreaker.
Thank you so much, and welcome again to all of you. Thank you for joining us today. So today's icebreaker is not our usual quiz like the other times, but since we're talking investments, we want to sort of understand the demographics of all of us who have joined so that it allows our speaker to know the audience he's speaking to. And so I'll share a link in the chat. Also, you can scan the QR code on the screen if you can see my screen. And then you can join in this poll so that we can identify the demographics of all of our participants to assist the speaker in um, guiding us through this session. So if it's possible to scan the code, that would be good. If not, you can check in the chat. I'll drop the joining link. Um, is my screen visible? Oh, wait, sorry. Hello, Senna, can you hear me?
Yes, I can hear you.
Okay, so is my screen visible? Can you
Yes,
see my screen? Okay, all right.
yes, we can see the screen.
I see that nobody has joined in the poll yet.
Okay, so please, you can access the link in the chat box, and also if you can scan what is on the
Okay.
screen, you can do that.
Yes.
Let's make it interesting by joining and making this
Yeah.
encouraging for all of us.
I see we have over 20 people, but we've only received a few votes. Two people. Okay, see the votes are coming in now. Uh, we give a few, like 1 minute for all of us on the call to be able to join in so that we can. So right now it's looking like most of those, at least those who have voted are within 1 to 5 years of uh, their working life. Uh, okay. So yes, like young professionals, I see. A lot of us here are young professionals. All right. Okay. So then I will less than a year. Okay. So I'm assuming maybe either a few students also joining us. That's great. I think the webinar will be beneficial to all of us. All right. So the next question here. So 64% of us are 1 to 5 years. 18%. So split between less than 1 year and then 6 to 14 years. Okay. So the next question is, do you currently have any investments? So are you actively investing? Are you inconsistent with your investments? Do you not have any investments and you're here to sort of and get into it, or you're now beginning? You want to understand the whole essence of investing and not saving, which is what we're here to discuss today. Okay. So far, looking like majority of us are actively investing. Mm. So we have a few experienced investors here. So we would like to hear your contributions throughout the conversation. And so that the rest of us can learn from that. Okay, so a few more seconds and then we'll go to the final question. Okay, it's looking like no more activity here, so I'm guessing most of us have voted already. Okay, so most of us here are active investors, and a few of us haven't begun yet, but we're interested, which I assume is why we're here. Okay, so then the final question is, how would you rate your understanding of investments and capital markets? Are you a beginner? Do you understand the basic terms? Are you an intermediate or you're advanced? Okay. I guess the intermediates are those who are already actively investing. Okay, so 45% of us are beginners. Um, okay, I guess there's still more activity. A few seconds, and then we would close the poll, having understood the demographics of all of us here. Okay, so I think that most of us are beginners, which is good for us because this is the opportunity for us to learn about investments and as we've shown already in the previous question that we're interested. So yes, I guess now the speaker understands the people on the call, and so he'll be able to tailor this session to all of us. So thank you for participating, and I'll hand over back to Senna.
All right. Thank you very much, Kevin. We really appreciate. So now that we understand the participants' scope, and we would like to continue, and move to the opening address. So I will share my screen, and then yeah, Mr. Yao will take it from there. Let me share my screen. Okay, so the next on our agenda is opening address, and this will be delivered by Mr. Yao Frimpong, who is the Young Professionals Chair. Mr. Yao Kodia, thank you for joining us today. Can you please proceed?
Thank you very much. I'd like to say good afternoon to our distinguished speaker, moderator, fellow young professionals, students, and members of the SB Ghana community. On behalf of the Young Professionals Committee and Student Chapter Committees, I would like to say thank you and welcome you to this particular um, session on our investments and finances. I mean, today's theme is both timely and necessary. As young engineers, geoscientists, analysts, and professionals in the energy space, we are trained to design systems, optimize processes, and manage risk. Yet, one area many of us were never formally taught or really educated on is how to design and manage our own financial futures. We're taught how to earn, but rarely do we get the opportunity to be taught how to grow. In today's economic environment, marked by inflation, currency volatility, market shifts, and expanding digital investment platforms, saving no longer is sufficient. Wealth creation is what the focus is. We want you to understand that wealth creation requires structure, discipline, access to markets, and the right mindset. And that's why today's session matters. This conversation moves us from passive saving to strategic partnership in the capital markets. It challenges us to think beyond bank accounts and also to look into asset allocation and asset management and the right securities for long-term capital goals. For young professionals, time is our greatest asset. These habits that we can build in our 20s, in our 30s, have far-reaching implications and benefits if we do stick by them. We're therefore privileged to have with us a distinguished industry expert in AJ Boateng, whose career spans global financial institutions and currently leads one of Ghana's most high-performing investment platforms. His experience across emerging and developed markets and his role in pioneering innovative funds certainly puts us in a unique position to learn from one of the best. Today is not just about financial instruments, it's about financial responsibility. For us to understand the risks intelligently, manage them intelligently, leverage opportunities wisely, and position ourselves to not just be earners, but also be positioned as investors. As we begin, I encourage each one of you to engage actively and ask as practical as you can the questions and think beyond the theory that you might hear today. Whatever is nagging, whatever's on your mind, try and find a way to ask it. Because I'm certain at the end of the session, you would have a better idea of how to manage your resources beyond today. With that, I officially welcome you again to the February lecture series and hope that we will find a lasting impact from this session. Thank you very much.
Hi, thank you very much, Mr. Yaokodia, for your time. So I would like to continue from here. And on my list is to introduce the speaker. And we've actually summarized his experience so that it is actually within time. So you can actually follow me to go through his experience, which is very, very interesting. So Mr. AJ Watson is a chief investment officer with over 12 years of experience and has delivered exceptional returns and pioneering investment solutions across emerging and developed markets, currently leading the Blackstar Group investment platform and has delivered the best performing fund in Ghana for 3 of the last 4 years and introduced the country's first global equity and S&P 500 tracking fund. He's a SFA charter holder and has worked for Barclays with Lion Trust Asset Management and American Express. He currently has the asset management division at the Pragstar Group. So Mr. AJ is worthy of experience that today we've gathered here to experience much from him too. So Mr. AJ Boateng, we really appreciate your time and for sharing these experience with us. From here, I will hand over to you so that you present. So I'm going to stop sharing and you will take over from there. Before you share, then we test your mic. If we can hear you or something, then you take over. Thank you and welcome to join us, Mr. AJ Boateng.
Hi, can you hear me?
Yes, we can hear you.
Great, great. Good evening, good afternoon, everybody. I'm actually in. I'm just wrapping up in one of our other meeting. So one of the senior portfolio managers at Blackstar would take the presentation through, but I'll be on a call throughout. And he will be the one that does the presentation. And at the end, if there are any questions, he and I will answer it. We had a board of trustees with Access Pension that just overran, so we're just coming out of it. So Emmanuel will do the presentation. Emmanuel is one of the senior portfolio managers. He actually manages the Enhanced Equity Beta Fund in Blackstar, which is the global technology fund in Ghana, which is the first actively managed global equity fund in Ghana. Emmanuel is one of the most knowledgeable people in the country when it comes to these things. But I think Yao summed this thing up, and this is why he wanted us to come and speak with you guys, which is inflation and currency depreciation has been Ghana's biggest problems for the longest of time. And as Emmanuel sort of goes through this presentation, he will highlight some of these points and why this conversation is so important and so vital for you all. But there's another thing, which is, this is my 5th year being back in Ghana, and we do this presentation all the time. And normally, only about 5% take action, right? So they'll hear all the information, they'll get all the knowledge, but only 5%. So for every 100 people, only like 5 people. In fact, today you are 35 or so. Only about 2 people will really take that knowledge and take it into action. So I'm hoping that this will be an exemption where you hear the information and you are able to also sort of take action on it. The one thing that Blackstar has done that the rest of the market in Ghana are now copying is that we've made it possible for Ghanaians to have access to every investment in the world. So you now have the same access to investments such as somebody in the US, UK, or Europe. So for those of you who might want to run away from the country, we've given you the reason to grow your money so that you don't need to run abroad anymore. With that in mind, Emmanuel, I think he will say a little bit more about himself, but he studied at Legon. He's one of the most ethical people in Ghana that I know. And in addition to that, it is also one of the sharpest brains we have in the country. Um, and you know, I enjoy his presentation whenever I'm in the room. So, Emmanuel, can you unmute yourself and then take us through the
Yeah.
presentation, and then I'll be on a call.
Thank you very much, EJ, and thank you, Senna and Yao, for putting this together. I hope everyone can hear me.
Yes, we can hear you and you
Yeah,
are
great.
welcome.
It's always a joy to meet young professionals to discuss finance. Just recently, we met with, um, I think, medical students in University of Ghana, and the conversations were just around this, where you're in school, you are doing good work, or you start working, you're doing some good work, you're earning some money, but you end up retiring or getting to a point where you can't work anymore, but you have nothing to show for it for all the years of working. And that's for us one of the reasons why it's always important to have these conversations to align. And so I think your topic was right on the nose, where learning about savings and moving from savings to securities and trying to understand what that means for young professionals as well. For me, these conversations usually I don't want to talk too much because I know a lot of us, and it's good that you did a poll, so it gave us context as to how we need to treat this topic. And so for me, I wouldn't want to talk too much on this call, but rather to get more feedback on, because there's a lot of TikTok investment advice going around. So I'm pretty sure that most of you have some form of background, or you've heard some social media person talking about investment and where to put your money. But it's always good to have the conversations with the actual professionals on the ground. And so for me, I'm happy to be here, and both AJ and I are happy to be here to have this conversation. So we'll just dive right into it. So from savings to securities, how young professionals build wealth in the capital markets. I think for such professionals, using capital markets is a bit intensive. I think we should have broken it down a bit more, but I will still go ahead. So for me, the key things from this topic when I received it was to look at what savings is. A lot of people think that savings is when they put their money in the bank, they are okay. But it will interest you to know that the banks pay you as little as 2% on your deposits. So you can keep your money there for 10 years, and we'll have a practical look at how it looks like on this in this conversation. So just going into it, what is the difference between savings and investment? So we put here setting a portion of your income not spent immediately aside for future consumption. That's what savings is. So savings is just you saying that, okay, I have this money. I'll keep my money in my bank, and whenever I need it, I'll go for it. That is um, way different from what investment is. So investment, I would say, is savings plus, or going a step ahead of savings. So investment is more of taking that savings, putting it somewhere for it to grow. And that's what investment is. So we will see the definition of investment being is allocating money with the expectation of earning an income or profit. So that is what investment is. There are a few characteristics. So savings will be characterized by safety, liquidity, short term. They are short term and they are usually bank deposits. So safety meaning that anytime you want to go to the bank to take your money out, you can take the money out. Whether there's a return or not, you can take your money out. Liquidity is just a layer of that, which liquidity is just how quickly you're able to get that money around. So if you have a GCB bank account and you have the GCB app, you are easily able to get money from your bank account into your Momo wallet, or to send money from your account to someone else to make payments. And that sense is what we call liquidity. So you are liquid enough. And then there's short term, because these are usually things that you can immediately fall back on. We term them as short term. Investing, on the other hand, is characterized by growth. So growth in the sense that your money starts to earn you money. And that's what investment is about. So your money starts to earn you money because your money will be working for you. And that's how come they always say that for the rich people in the world, their money is working for them when they are asleep. And that's how investing works. If your money is in your bank account, your money is not working. Your money is just idle. But once your money is invested, your money is working for you as you are asleep. So there's growth. That's what we call volatility. So volatility is just how high and low investments go. So today you are up, tomorrow you are down, the next day you're up, you are down. That's what we call volatility. So volatility is just the up and down of an investment or the swings of an investment. So that's how we would characterize volatility. Then investments usually, depending on the reason for investment, is should be usually long term. So for young professionals, for example, I saw that a lot of you have worked between 1 to 5 years, and so typically you have a long term horizon, or some of you are quite young, and so you have room to take more risk or take more horizon when it comes to investment. So figuring out that instead of keeping that 1,000 CDs in the bank and earning a 2%, you put it in an investment and earn maybe 12%, which is way better than that 2% that you are earning. So that's looking at that, that's the split between savings and investment. And investment, there are various ways that we do investments. There are stocks, there are bonds, there are real assets, that is buying a building, renting it out. Those are all forms of investment that you can look at. But within the confines of what we are discussing, the available options we have are the stocks and bonds, and we'll go further into it as we go forward. So I just did sort of a scenario to look at savings and investments, what it would mean for someone who is contributing 1,000 CDs over the next 120 months, which is 10 years. Just look at whether it makes sense to keep your money in the bank. So now the banks are giving you an average of about 2% a year on your deposits. And I use the base case of Ghana, which is for the investment scenario that you invest in the Ghana Treasury bill at 12% a year. And you can see how wide the difference is. So your money is in the bank for scenario one, savings. Your money is in the bank, you're earning 2%. Your money is in the bank, you're earning 2%. At the end of 10 years, you would have made a total contribution of 120,000 cedis. But your full amount or your full value at that point is 132,000, which means that you've only made 12,000 on top of your investment, or on top of the 10 years of making that investment. So if you follow, you realize that at the end of it,
Ima,
yeah,
sorry to interrupt. Can you
yeah, sure.
please take it again?
Okay.
Yeah, thank
So
you.
good. We are looking at two scenarios. Scenario one is that you make a 1K contribution into your bank every month as your savings. The other scenario is that you actively invest 1,000 CDs into government of Ghana treasury bills. Every month you buy treasury bills 1,000 CDs, right? For the next 10 years. So every month you are contributing 1,000 CDs. Over the next, sorry, over the next 10 years, that 1,000 CDs contribution, if you take that 1,000 CDs, because in 10 years, you have 12 months in a year, that's 120 periods or 120 periods of contributions. So it means that in the savings scenario, you would have, in both scenarios actually, you would have contributed 120,000 CDs at the end of 10 years. John, are we there?
Yes, please, I'm following.
Yes. So you would have contributed 120,000 CDs in both instances, right? Now, that 120,000 CDs, for the savings scenario, you're earning 2%. That's what the banks would typically pay for you. And this is even on the high end. That's for people who have a lot of money in the bank. That's what the banks will pay them. For those of us who have peanuts in the bank, they're probably going to pay us something close to nothing, right? So this is a base assumption that the bank is paying you 2% on all your deposits. Then at the end of 10 years, you would have made per your contribution, you would have contributed 120,000 cedis. But the value of your, because the bank is paying you 2% a year, your value at the end of that 10 years will be 132,000 cedis, which means that the bank has only made you what 12,719 cedis. John, does that make sense?
Yeah.
Good. On the investment scenario is saying that okay, you are earning the risk-free rate, which is a 364-day treasury bill that the government issues. The government, you are getting 12% on it. The current rate is around 12%. Holding that same rate constant for the next 10 years, assuming that you're getting that 12% on a full year basis, at the end of it, even though you have contributed 120,000, you would have 230,000 Ghana cedis. Did you get that scenario?
Yeah. Yeah.
Yeah, good. So this is what we would call the difference between choosing a savings product and then choosing an investment product, right? And this is why it is important that we have this conversation to understand the difference between savings and investment. Are we all aligned up to this point?
Yes, sure.
Good.
Yes,
Okay.
please.
Yeah, then I'll go on. So typically your savings are done with commercial banks, some save with rural banks, savings and loans institutions, microfinance institutions. But a lot of people don't have enough information about where they can do investments. Where you can do investments, we call it the capital market. And the capital market is it's called capital because capital initial, when you're going to start a business and we talk about capital, it is your initial funding. So the capital market is where businesses raise money and then they promise you a certain amount of return. So once you're giving your money to someone to do a business, or when you're starting a business, you are expecting a certain level of return. So it is the same scenario just runs here. So it's called capital market because businesses use it as a way to raise money to fund the project or the business that they are running. And so on the capital market, there are two ways that this works. There's a debt market and there's the equity market. The debt market is where businesses come to the market to say that I want to raise debt market, I want to borrow cash to do a certain business. So the banks would typically, or the banks or the government, in Ghana's case, usually is the government. The government will say, I'm issuing a bond. Now that bond is just a way of the government to say that I am borrowing cash from people. So the government will issue a bond, and it's called a bond because it binds both parties. The government is promising you a certain amount of return or a certain amount of interest rates, while you give you give the government your money to use for their activities. So the debt market is a borrowing market. So anytime you buy a bond, you buy a treasury bill, you buy any form of debt security, what you are doing is that you are giving a loan to whoever is issuing that bond. In the case of Ghana, which the government of Ghana is the biggest issuer, you are giving your money to the government, and the government is the borrower, and you as an individual are the lender. So there's the debt market and there's the equity market. The equity market is the other way where you actually have ownership of the company. So in this case, the person is not promising you a certain return by saying that if you give me your money and I do the business, if I make a certain return, I'll give you parts of that return. That is what the equity market is. So in buying equities or buying stocks, as we call it, it's just you saying that you are owning a portion of that investment or that vehicle that you are going into. So currently, if you go and buy Cowbank shares or you buy um, um, Benz Oil Palm shares or you buy MTN shares, what you've done actively is you've bought a part of the ownership of in MTN. So if MTN says that, okay, we made 400 million profits at the end of the year, we want to distribute 200 million to shareholders, which is owners, then you're also going to partake in that dividend essentially because you are an owner of MTN or you own MTN, portions of MTN. It doesn't also mean, on the lighter note, it doesn't also mean that you can just go to MTN's office and say that I'm a shareholder, so give me free SIM card. right? That's on the lighter note. But this is the two splits in the capital market. So I just wanted to give us an overview of what the capital market, because when people say what capital market, it sounds very absurd, but a lot of us are already invested in the capital market, but we have no idea. Even if you are invested in a mutual fund, you bought a mutual fund with any of the investment companies, and they tell you that we buy bonds, it means that you indirectly are exposed to the capital market, either through the debt market, which is the bond market, or through the equity market, which is through the Ghana Stock Exchange. So let's delve a bit more into it. So the equity market. So the equity market, what is the equity market? Equity markets, to make it easier, we call them stocks, or also known as equities, and they represent ownership in a corporation or a business. So if say you and your father start a business and you all contribute capital of 100K, 100K, now the capital of the business is 200K. It means that you own 50% of the shares of the company, and your dad also owns 50% of the shares of the company. If you introduce other people and they also bring their own capital, then the split is becoming more. So you are having a lot of owners. That's how the equity market also typically works. Now you can buy stocks and you can trade stocks. When I say trade stocks, you can buy and sell stocks on the Ghana Stock Exchange as and when you want, if you have the right platform or you have the right avenue. So let's look at the characteristics of equities. So equities, we have the risk and return. So because they are a measure of, equities are more of, if I make this return from doing this business, we split the return and then we share it to everybody, right? It is a bit more risky, and there is also the potential to make more return. The reason why it's risky is that now you go into a business, and then the first year, with a scenario that you and your father contributed 100K, 100K, and then you go and do the business, and unfortunately, you go and buy nose masks during the COVID time because you saw that people were selling nose masks for 100 cedis. You buy the nose mask, then the next day you get a delivery of the nose mask. Then the next day there's a lot of nose masks on the market, so the prices come down to 10 cedis. In that sense, you are going to buy nose masks for 100 cedis for one, but now you have to sell it for 10 cedis. It means that you have made a loss on that investment. And because there's that loss, both of you and your father lose money, right? If you had borrowed money from someone and you were going to pay, in the next scenario, which is you borrowed money to buy the nose mask. That person that you borrowed money from is not expecting his return. If you told him that I'll give you 10% on the money that you have given me, you still have to pay that person that 10%. Regardless of whether your business has gone down or not, you have to pay that return to the person. So on the equity market, if your money is in there, there's a lot of risk. So there's a risk and there's also the return. Assuming the other thing was right, where you made a lot of money, you're able to sell that nose mask for 200 cedis. It means that for each nose mask that you sell, you're making 100%. And that 100% will come to you and your father's pockets. And that's a lot of return. So the equity market is characterized by risk. There's high risk and there's also high return. There's also market price. Well, each stock or each equity is valued. So they'll take the company and see that this company is worth so so and so. And so if you want to buy this company, you are buying it at maybe 4 cedis, or you're buying it at 5 cedis, or you're buying it at 30 cedis. Currently, MTN is trading around 5 cedis, 40 pesos. So if you're going to buy MTN shares, that is the price that you pay for MTN shares. So if you want 1,000 shares, then you take the price and then you multiply that price by the number of shares that you're looking for. So in this sense, you pay 5,400 cedis for 1,000 shares of MTN. Are we getting the points? If there are any questions along the way,
Right, no, also about a
please
kind
feel
of
free
thing.
to ask.
Omu
So there's
your
market
Bible.
price. Each equity has its own price. So
Let me go
price
ahead
fluctuates
with
based on
you.
market conditions and then company performance. So if a company is doing well, it means that that company is earning a lot of money from doing the business. So if the company is earning a lot of money, for you as an investor or a shareholder or an owner, it means that that money indirectly will come to your pocket too when they decide that I'm paying dividend, because dividend is paid out of the profits of the company. If the company decides that they want to reinvest that money, Once they invest that money, they are doing more business to get you more money in return. So as the price of the security goes up or the price of the stock goes up, then your value as an investor is also going up. A clear example is when MTN was issued back in 2018, when they did their initial public offering. It went for, I think, 75 pesos, and now it's trading around 5 cedis. So you can see uh, price appreciation from 75 pesos to 5 cedis 40 pesos, right? So price appreciates or depreciates based on market conditions and also the company's performance. And also now becoming more important is also sentiments on the market, which is how people are viewing the company. Then categorization. Stocks can be categorized by sector and industry. So you find that even within the Ghana Stock Exchange, in the international market, we call something the gig sectors. So you can have industry. MTN is in the communication industry. Cowbank, GCB, Enterprise, SIC, they are in the finance industry. Benz, Oil Palm, they are in the manufacturing industry. So stocks are categorized based on the industry that they operate in. Then we have capital gains. So when we say capital gains, it's what you get when the price of an investment goes up or the price of the stock goes up. So as I mentioned, MTN moved from 75 pesos to now 5 cedis, just around 5 cedis. So it means that for you, you would have made what we call capital gains. Capital gains means that you bought the thing for 75 pesos. Now, if you decide that you want to cash out or you want to sell, if you are selling, now you are selling at 5 cedis. And whatever you make, the difference between where you bought it at and where you sold at is what we call capital gains. Then finally, there's the dividends. So dividends are what is paid out to investors either yearly or as determined by the company, as and when they want to pay. So in the grand scheme of things, that's how the equity market works. Then we look at on the local markets, we have if you want to buy equities, they are traded on the Ghana Stock Exchange. Some of the stocks there, we have MTN, we have EcoBank, Sector Banking, we have Goil. Goil is also a listed company, oil and gas. We have Guinness Ghana. They are in the manufacturing sector. And then we have Ashanti Gold also in the mining sector. So you buy the stocks and they are traded on the Ghana Stock Exchange. So anytime you want to buy some of these investments, you find a broker who will be able to buy you some of these investments. So investment consideration, one of the things you have to look at before you decide that you want to buy these things is also economic environment. Economic environment, because think about it. If you think that oil prices are going to, I'm giving you a scenario. It is not investment advice, please. So you think that oil prices are going to go down. What that means essentially is that for Goil, for instance, which is an oil marketing company, it means that their margins or their profit is going to go down because when oil prices go down, they don't also sell at high prices. They have to also reduce their price, and that has an effect on their bottom line or their profits at the end of the day. So in that sense, it means that for you as a shareholder, you are going to lose some value because if you were expecting that they make revenue of 100 million, now they are saying they are going to make revenue of 50 million. It means that if they are going to pay you a portion of their income, maybe 50% of their income, 50% of the 100 million would have been 50 million. Now they are making only 50 million. So it means that they can only pay you 25 million. So essentially it has a direct impact on your on your return or your investment gains over the period. So the economic environment is very important. Then the financial health of the company. Is the company in a good position? Are they doing well? Are their businesses growing? Is MTN owning most of the market share? If you call someone today on Telecel, you call someone today on Vodafone, are you able to reach them? Comparing MTN and Vodafone, which one is better? Which fiber are people buying more? Are they buying MTN fiber or they're buying Telecel fiber? Those are some of the things that you actually need to look at before you do an investment in a company. Once people are buying more MTN, it means that MTN is making more revenue, and so it's something that you need to look at. Then there's also management, how skillful management is in managing the company and its resources to earn you as a shareholder return. Then there's also one of the key things that we also need to look at, which is called future potential. How is the business investing in its future? What are they doing to take advantage? And now there's a lot of talk about the next thing is AI, the next thing is technology. So is the company actively investing in technology so that they still remain relevant in the future? Are we going to get to the point where now we've moved slowly, if you look at it, we've moved from physical SIM cards and now we are going to eSIM. So if you're a network that doesn't do eSIM, it means that very soon you're going to go out of business. So if there was a telecom company that was focusing on physical SIMs, now they are losing business because they don't do eSIM. For some Apple phones, they don't even have slots for physical SIM cards. So those are some of the things that you have to look at. What is the future potential that the company is potentially has, and what advantage that they can take in the foreseeable future? So this is pretty much on the stock market, Ghana stock market. So this was just to give you an overview of how the performance was for 2025 for some of the stocks. So we have a host of them here. So Clydestone, they're a digital company. SIC, which is insurance. EGH, EcoBank Ghana, Finance, GCB also Finance, Access Bank Finance. Then we have Total Energy, which is oil and gas. Then we have Societe Generale, also banks. Then we have CPC, also manufacturing. Then we have ETI, the parent company for EcoBank. Then we have Benzo Oil Palm. So we have a host, and then Farm Milk, um, Republic Bank, Royal Cal, Enterprise, MTN. So a host of companies here. And we can see that 2025 was actually a good year for most of them. Clydestone alone returned about 1,433 and SIC 344%. So this is just to give us an overview of how the Ghana Stock Exchange also did last year. Just as we consider local stocks, we live in a global village where there are other considerations too. So you own an Apple phone or you own an iPhone, but Apple is actually a company listed in the US that you can also invest in. So just as we look at our local space, there are also companies that outside that you can also invest in. So the foreign equity market is also available as a way for investment. AJ mentioned earlier in the submission that we created the first global technology fund. And what that does, enhance equity beta, what that does is invest in some of these names just to give access to um, Ghanaian investors to also invest in some of these markets because hitherto you wouldn't find a lot of people paying close attention to some of these companies. The person has been using Windows since it was Windows XP, but has never bought shares of Microsoft. Those are some of the considerations that came to mind when we were creating the fund. And so key for that side is also for you as a Ghanaian investor is currency risk, which is that once you are going to partake in these investments, there's an added layer of risk because the city, you need city to buy dollar to invest in some of these things. That's the typical way. And so once you are converting your cash, it means that you're also taking another layer of risk. So as CD depreciates or CD appreciates against the dollar, or as we call it, as dollar appreciates against the CD or depreciates against the CD, it also affects the return or the gains that you make on these investments. It is quite similar. Equities are quite similar. Also, the economic environment also affects how they also perform. So if people stop using Meta, for example, it means that people stop using WhatsApp, people stop using Facebook, Instagram. It means that it directly affects the business of Meta. If people stop buying iPhones, using MacBooks, it also directly affects the business of Apple. If people stop shipping from Amazon, directly affects the business. So some of these companies are ones that you can also consider in your investment journey. Then, just to give you a picture of how that has also performed, the US has two of the biggest indices that track the US markets is what we have, the S&P 500 and then the Nasdaq 100. Unfortunately, I realized I wanted to do a 1 hour course, so I'll just skip through a few other things so that we can catch up. So you realize that this is in dollar terms because they are dollar assets. In dollar return since 2018, the S&P, which is the biggest 500 companies in the US, has returned 205% over the last 7 years. whilst the Nasdaq, which tracks 100 of the tech companies in the US, so that is scaled down to only technology companies, has returned about 325% in dollar terms. We didn't layer on top of that the currency, just to give you a picture of how well they also perform or how well those markets also perform. Now let's go more, let's do a deeper dive. From savings to securities, what are the initial steps? The initial steps, when people talk about investment, they just decide that, okay, let me just go and buy anything. But there are few things that you need to consider before you go into investment. Assuming you just started your career as an engineer, and then you just decide that you're going to buy um, Apple stocks, right? Now you go and buy Apple stocks. Apple stocks, again, they are volatile because they are equities. They are they are um, they are volatile in that sense, and so when you buy them, you may lose money or you may gain more. So it's very volatile. Now, within that space, right after you buy the Apple shares, you decide that, hey, I need to move out of my parents' house, so you have to pay rent. So you fall back on that money. Now you fall back on that money only at the time that maybe Apple's price has come down. So when you sell, you make a loss. Maybe you did 1,000 cedis. Now it has come to, if you do the conversion and you come back, it will be 800 cedis, but you need 1,000 cedis to rent. In that sense, you made a bad investment decision, even though the idea behind the investment was good. You made a bad investment decision because buying Apple shares should be for a long term, not for a short term. And you wouldn't have had to fall back on Apple shares if you had built what we call an emergency fund. An emergency fund typically should be about 3 to 6 months of your salary or your salary. I'll say salary and not expense because you're assuming that for those 3 to 6 months, you want to live comfortably and you live comfortably on a salary. So you want to have about, personally, I would want to have about 3 to 6 months of my salary in my emergency fund, just so that if anything happens and I have to stay home and I'm not being paid, I can survive for 6 months, and then as I prepare to find another place to be, right? So first and foremost, you have to build that emergency fund. The next thing is also to define your goal. So, what are you really investing for? Are you investing to buy a car? Are you investing for retirement? And one of the biggest conversations we've had this year is on retirement, even for young professionals. It's very essential that we pay particular attention to that. A lot of people forget about it and they enjoy their money till they are 55 and now they start thinking about retirement. But you have to define your goal, the reason why you're investing, or the reason why you want to invest. You want to buy a car. You want to buy a car, and then once you define the goal, then you want to assign a timeline to it. So, okay, so I want to buy a car in the next 2 years. What do I need to do to meet that target? How much do I need to save monthly? What investment do I have to do to get to that goal? So that is defining the goal that you are investing for. And you can have as many goals at a time as you can. You can decide that you're going to buy a car in the next 3 years, and at the same time, you're investing to travel. That's a different account. You're investing for retirement. Or some of us even invest for December chilling. So you're just putting aside a portfolio so that you can chill in December. So every month you're putting 100 cedis down and you're buying a short-term investment that will grow. So December, you are chilling. It's also done. So you define the goal. Once you define the goal, then you know exactly what you are working towards. Then you open a brokerage account or a mutual fund account. So a brokerage account is just a brokerage firm is a company that's able to buy and sell securities on the capital market. So they can buy equities for you, they can buy treasury bills for you, they can buy bonds for you, they can buy everything for you. That's a brokerage account. Or you can also find a mutual fund. So a mutual fund is categorizing it. It's a collective investment or collective investment scheme that invests in a certain class of assets depending on the objective of that mutual fund. So you can find a mutual fund. So an example is enhanced equity beta fund, as we've spoken about. The fund's objective is to invest in technology stocks globally. So that's the objective of the fund. The fund is a long-term fund, right? So that is the objective of the fund. So once you're going into that fund, you know that the objective that or the goal that you are trying to plan for is probably retirement or a very long-term goal. So for young professionals, you want to build a house in the next 10 years. So you want to save towards building that house. That's a long enough goal. So you would consider enhanced equity beta as a mutual fund for such a goal. So you open that brokerage account or you open that mutual fund account for that defined goal that you have. Then there's also what we call start systematic investing. Systematic investing, for the want of a better word, investing in everything, for the want of a better word. This we will call invest in the don't buy one, buy a lot. The easiest way to say it is to diversify, right? So have a lot in the pool that so that when one is going up and one is coming down, they average out. And when both of them are going out, you are enjoying. When both of them are coming down, you're enjoying. But there's no case that you have both of them coming down at the same time, provided you have a good mix of assets in there. So systematic investing, that's an example is investing in the S&P 500 or a mutual fund that tracks the S&P 500. That's a good way to systematically invest. In that sense, you are indirectly you are getting exposure to 500 of the biggest companies in the US just by doing that investment. So you don't have to stress by saying that, okay, let me buy Apple shares small, let me buy Amazon shares small, let me buy Meta. You don't stress about that. All you know is that you bought 500 of the biggest companies in the US, and that's all. Then reinvest dividends. This is especially important for young professionals because I'm assuming that at this point where you get here, you would have built an emergency fund for about 3 to 6 months. So it means that when your dividends come, you know that it is not money for you to chop. It is money for you to reinvest or put back into your investment because you don't need to chop it because you have your emergency fund already there, right? So reinvest every dividend. Dividend. So it is not just dividends and coupons. So coupons are periodic interests that the bonds or fixed income securities pay you. So if you have bought a bond, bonds typically pay coupons or interests every 6 months. So once they pay you that interest, you go back again, you buy another bond or you buy the same bond, and then it continues to grow. So you're just taking your interest and reinvesting it for it to also grow. So reinvest your dividends, reinvest coupons, reinvest any windfalls that you have. And those are the initial steps. Now, let's go on to the common mistakes that um, some of us make, young professionals make. Keeping all our money in savings. One of the earliest things personally I learned is never to keep my money in the bank. And for the longest time, I don't remember the last time I had more than 1,000 cedis in my bank account because I don't expect my money to be lying down in the bank and then I'll be receiving 2%. And the 2% is not like 2% a month, it's 2% a whole year. So if you want to see how much you make a day, you have to divide that 2% by 365 to see how much you make in a day. So keeping your money in a savings account is the worst decision that you can ever make. Always keep your money invested. So far as you know that this scenario is catered for, that you've built that emergency fund, always keep your money invested. Even if it is, for those of us who have cars, even if it's a fuel, your savings for fuel, put it in a very liquid mutual fund. So anytime that you want to take it out, you can easily take it out. All right. So keeping all your money in your savings is one of the biggest mistakes that we can ever make. The next thing is chasing quick returns. Men's good for. This is also one of the biggest issues that people have as young professionals. We want to make quick cash. You see your friend driving an Accord, you want to drive an Accord. Or Jesus drove an Accord, so you also want to drive an Accord. That is one of the biggest issues that people have. You end up buying something that looks too good to be true, and then when it bursts, you are in trouble. Quick returns, there's never a guarantee of quick returns. Even on the equity market, there's never a guarantee of quick returns. You are down today, you are up tomorrow, you are down today. That is how investments work. Never accept when somebody tells you that I'll give you quick return. It is wrong. And a lot of us are doing that now, chasing where we think that return is. You end up being bent. Especially if you think about it, someone has gone in and has made return and it comes to tell you about it. You don't know at which point you are going in or which money, where they got the money to give him the money. And so that is, you need to invest wisely and you need to do your own due diligence before you decide to invest. Or else you end up with the men's goats scenario. You don't know where the company is making their money, and then you decide that you are going to invest. If you're going to buy MTN shares, you know that MTN does business in Ghana. MTN sells data, they do calls, they do Momo. you know really how MTN gets their money. If you want to buy Apple shares, you know that Apple sells Apple phones, iPhones, they sell tablets, they sell laptops. You know exactly where they get their money from. You know where Google gets their money from. But if you decide that you're going to invest in something that you don't understand, then that's where the issue is. You're chasing quick return, and then you end up getting burnt. The third one, investing without understanding risk. That's also one thing that people don't understand. You choose an investment, say you come and buy enhanced equity beta fund, but you don't try to understand why enhanced equity beta fund is the way it is. It's a very volatile fund because of the type of assets that it's investing. But you just decide that, okay, let me just go in. Now you go in, you have to pay rent in the next 2 months. Then take all the money because your friend has told you that enhanced equity beta gives very good return. You go and put your money in there only for stocks on the US market, tech stocks on the US market go down. And then now you can't pay rent and your landlord is on you because you've made, even though the investment is a good investment, but you made the wrong investment choice at that particular point in time because the goal in the first place was wrong. You can't put rent money in a house equity beta fund or an equity investment when you know that the timeline is very short. So you can have the good mindset or you can have the good investment idea, but the goal does not align with the investment idea. And so again, back to what we discussed, define the goal and then invest where you need to invest, not just investing everywhere. So you understand the risk of the investment that you're making. Stocks are very volatile. Stocks go up, they come down. Understand that you can't put money that you need immediately in stocks. That's the simplest way I can say it. Then we have no diversification. So investing without diversifying. So yeah, you just want to buy government of Ghana treasury bonds. You bought government of Ghana bonds, and then the government decides that they are restructuring their bonds. When they do that, now you are locked up with long-term bonds that are paying you 8% coupon, right? So in that sense, you did not diversify. Had you had a pool of assets, maybe you had done a bit of MTN shares, you had bought a bit of GCB shares, you bought some Apple shares, you bought some treasury bills, you would have a diversified pool so that when something happens to one, you can always fall on the other ones. So you have to diversify. So one of the common mistakes that we also make as investors or as young professionals is that we don't diversify enough as we start investing. We just focus on one. So it's like, oh, somebody taking his whole money and then going to put it in men's gold. You lose out. You lose out big time. Now, the last thing I would also like to talk about, that which is the common mistakes we make, is the panic selling. Panic selling I would say, is one of the biggest mistakes you can ever make. You buy, I'll just take us back to a few years ago, during the COVID time. You had bought Google shares, you had bought a lot of the tech stocks in the US felt it. So you had bought Google shares. And then all of a sudden, COVID hits. And now people start to sell their securities. Once people start to sell their securities, the price goes down. As the price goes down, you also say, hey, everybody is selling, let me go and sell it. Then you decide to sell, then you make the loss. So maybe you bought it at $100 per share. The price goes to $50 per share, so you lose 50%. Then you decide you're going to sell. Then you sell only for 1 year down the line, after the whole COVID thing settles. Now the price is up to 200%, and you are still holding your money. At that point, you've lost money. We call it opportunity cost. You've lost money because you lost when you sold, and then you've lost if your money had been in, you would have been earning 100% because it would have moved from your $100 to $200. So it means that 100 to 200 is a loss to you because you've not earned it. But you could have earned it. I don't know if it's making sense. So for you, you would have lost $50 and now you've lost $100 opportunity cost. So for you, you lost $150. This is what panic selling costs a lot of us. I mean, it has, even though I know, but it's not always easy to say that you want to hold the assets when it's going down. But that is for me how that's when you actually decide that you want to buy a bit more. We'll get into that. But panic selling affects or is one of the biggest mistakes that you should always avoid. Again, you would avoid panic selling if you did this, understanding the risk with the investment. Understanding the risk with the investment. If you understand the risk with the investment, so I'll give you an example. AJ has always said that the risk to some of the companies like Google and Microsoft is that those companies don't exist anymore. So if the only way Google will not exist anymore is that we stop using Google Meet, we stop using Google search engine, we stop using Google Drive, we stop using YouTube, we stop using Google Pixel. And I don't know in a scenario where all these products are not, we are not using them. The only way Meta, there's a risk to Meta is if we stop using Facebook, we stop using WhatsApp, we stop using Instagram. That is the real risk of those companies. The only way we stop using MTN is if everybody decides that we'll not use MTN again, we'll not do Momo again. We are going back to walking to Kumasi to give the money to our grandmother. That's the risk that we have, or that's the actual threat to these investments. So once you invest, you understand these investments. If the price comes down, then you know that but the company has not really changed. The company is still the same company that I bought in the first place. So why am I selling? You have to understand the investment that you're doing before you do it, or else you always end up panic selling. And someone has said panic buying is also panic buying is also a big problem, and it is when you see that okay, everybody is buying, let me also go and buy it. At that point, maybe the price has hit its peak, and you end up buying at a very high price, only for you to feel the
Hello,
heat, and it comes out very.
Laima.
Yes.
All right. Please, can we wrap up in
Yeah,
the
yeah,
next
yeah. I'll
five
just finish
minutes?
shortly. Yeah.
Sure.
I'm wrapping up shortly. So panic selling is also one of the instances. So building a startup portfolio, what are the available options? So there are local government securities, there's commodities, there's corporate bonds, there's global securities, there's investment grade bond, there's foreign government bonds. So the US government also issues treasury bills, and you can invest in that. All governments actually issue treasury bills. Then we have local equities. So the local government bonds are what the government of Ghana issues. So your treasury bills, your government bonds, your Ghana government bonds, commodities, gold, silver, oil, and copper, some of these instruments. Then there's one thing that I didn't put here, which is real estate, which is also one of the good investment vehicles that you can also look at. So what we did was to do a three portfolios with different combinations of assets. So the GSECI is the Ghana Stock Exchange Composite Index. So we are assuming that for portfolio one, you invest 10% of your money in the Ghana Stock Exchange, and then 20% in the S&P 500, which is 500 of the biggest companies in the US. And then domestic bond, which is government of Ghana bonds, you invest 60%, and then you buy some gold also, 10%. This is what this portfolio is. Then portfolio two, you see around through 50% in stock exchange, Ghana Stock Exchange, 20% in the US S&P 500, 20% in government bonds, 10% in gold. For portfolio three, you want to tilt your portfolio more to the external security. So you do 50% in S&P 500, 20% in Ghana Stock Exchange, 20% in domestic bonds, and 10% in gold. What does that mean? So this is the dollar return. It means that in 1 year, this is looking backwards. We can't look forward because we don't know what the prices will be or what the performance will be. But looking backwards, which will tell us so 1 year, the portfolio one, which has more of the equities, Ghana equities, has more of the government bonds, you see that did negative 23%. This in dollar terms. This is in dollar terms. So USD performance, dollar terms. The portfolio two, which has a balance, more government or Ghana stocks, did 4.9%. And then the portfolio with more S&P or the more US exposure has done 6.81%. 3 years, over the last 3 years, portfolio one would have done negative 43%, this in dollar terms. Portfolio two would have done negative 16%, also in dollar terms. And the portfolio with more S&P would have done negative 4%. This all in dollar terms. 10 years ago, the portfolio with the biggest S&P has done 35.9% in dollar terms. And I'm highlighting this because over the last 10 years, the Ghanaian currency has been our biggest problem as Ghanaians because we've seen after the redenomination in 2007, when it became one cedi to $1, we are now around 10 cedis. And so the cedi has taken one of the biggest beating, over 100% loss of value, right? So it means that some of these assets make more sense. So even though you are, and you see, we don't understand it when we say that, why we are looking at it in dollar return, because as Ghanaians, everything that we use and we spend on is we are indirectly exposed to the dollar because you buy a phone, it is priced in dollar. The Apple phones that we use, the Windows, Samsung phones that we use are all priced in dollar. We ship them here and they're converted. We buy them in CD, but we have actually bought them. We have actually bought the dollar price. So everything that we use here, the laptops, the phones, some of the clothes we wear, if you use an Apple Watch, you're paying dollar. Everything that we use, we have that exposure to dollar. So it's always important to look at this as well. Then let's look at it in CD terms. 1 year ago, still the portfolio with more government of Ghana bonds, and this is because of the domestic debt exchange that we saw in 2023. And I know a lot of us are aware of what happened. And so in CD terms, you still realize that 10 years ago, which is a long-term horizon, the S&P has still done better. It has done 389, 87% with that mix of that portfolio, right? Even with the drawdowns from the domestic debt exchange, it has still done 387%. So this was just to give you a picture of what it looks like when you decide that you want to diversify your portfolio a bit, not to look at just Ghana, but also look at external assets as well. Now, the thing I'll leave you with is that each life objective has or anything that you're doing, you have to look at some things before you do them. So for short-term investments, example, your emergencies, your rent, birthday savings, or investment time horizon shorter than 3 years, you should focus on capital preservation, liquidity, and stability. And within the capital market, you should focus on debt, which is fixed income securities. And within the fixed income security, you should actually be looking at shorter term duration debts or shorter term duration fixed income products. So your 1 year treasury bills, your 182 day or 6 month treasury bills, your fixed deposits, your 91-day treasury bills. Now, if you want to buy a car, land, car, education, marriage, and the horizon is about 3 to 10 years, then you should look at building a portfolio that focuses on balance of growth and then income, right? So you have a portion of your portfolio that is equity bias, and then part of it that is income. When we say income, we are talking about fixed income. So debt on the debt side. So you're looking at the capital market and splitting your money between the two sides, some equity and some debt, and then you're blending that together. The last thing is long-term objectives, retirement, legacy planning. So if you are planning for a retirement that's greater than 10 years, then you should be looking at capital growth and wealth accumulation. This, I say, you should have an equity bias or a balanced portfolio. We have people who have a long-term horizon, but they are just afraid of risk. They don't want to go near risk. And so they'll stay more close to the balance side, even though they have more room to be equity biased. So in the long and short of it is that you need to be there has to be discipline, and y'all mentioned it. There has to be discipline with the investment. You have to be consistent with it, and you have to make sure that you are doing it even when it bends. There's a saying that you have to spend what is left after saving and not save what is left after spending. And it's important for us to be financially independent. It will be important for us to be financially independent as we go ahead, not spend our time working. So we spend our time working so much to earn a salary. When the salary comes, let the salary also work for you so that you can become a wealthy man. Like, yeah. Thank you very much, and I'm open for questions.
Thank you very much, Emmanuel, for your wonderful and insightful presentation. And I was watching through the participants and I realized that they're actually enjoying it. Most of them are saying that we should bring you back, and we hope that this is a series, so we would actually get in touch with you. All
Good.
right, so thank you very much. And the next on our list is to have a survey in a form of feedback from the participants. So, Kevin, please, can you share the survey link in the chat box? Kindly visit the chat box for the survey. This will help us to optimize our delivery, as you've all witnessed today, how this has been very, very good to all of us. So help us with your survey so that we can help you too. Okay, Kevin, can you put that in inside the chat box? Okay, so let me share back my screen. We are actually closing up, and we have to pass the official way to close too. So I'll share my screen and okay. So Kevin, can you confirm if the survey link is in the chat box? Okay, thank you. Let me see. Is Kevin on the call?
Hello, Senna.
Yes.
He has been engaged at the moment.
Okay. So we'll move past the survey link, right? Okay, so let's move to the next on our list, and maybe later the link will be shared, and I'll prompt you so that we move to the Q&A. So the next will be our Q&A. So the question and answer session here. There are two forms of submitting your questions. Whether you raise your hand and we ask you, or you put it inside the chat box. So I could see this hand up, and so I would quickly check that. And okay. Okay, so Harrison, you can unmute your mic and ask your question.
Okay, thank you, Sana. Can you confirm for me if I'm audible?
Yes, you are audible.
Okay, so he made mention of an open brokerage where he said if the open brokerage account is this like a third party that helps you invest in treasury bills and the other shares. Can he please clear it for me whether you have to invest in treasury bills using the brokerage accounts, or is it like a company that helps you do that? I really didn't get that part well.
All
Thank you.
right, sure. So, Ima, please, once you heard him, you could answer him once I
Okay.
check on the others.
Senna, can we do it this way so that we save on time? We can take about three questions and then I answer them together.
Answer them together. That's fine. But so far, that is the only question in the. Okay, three people are raising their hand. Let me add them. So, Mohammed, you can unmute and then ask your question. Hello, Mohammed. Okay, so Nicholas Cobra, you can ask your question.
Yeah, please, can you hear me?
Yes, please.
Yeah, so I wanted to find out from Mr. Ishen, asking that with regards to the treasury bill, which one is more um, like safer in that of interest return high, checking of the commercial banks and that of the rural banks, like if he's to advise a young professional, a young engineer, where would be the start? Should it start from the rural banks investment or the treasury bill or that of the commercial banks that we know in this country? Yes, please.
Well noted. Okay, so I want Siba. I want Siba, if permit, forgive me if I'm not right, but you can unmute and talk.
Okay. Please, can you hear me?
Yes, please.
Okay, so my question is the Black Star app. If there's a guide for us how to navigate through this app and how to actually make these investments um, properly. So that's my question. The Black Star app, any guide, any video somewhere that we can watch and then know how to invest properly.
All right. Well noted. Okay, Benedict. So this is the third question.
Okay.
So Benedict, we will answer you back. Let me get answers for the three questions. So, Ima, please, do you have all the three questions, or I should call on them for you?
No, I'm actually fine. I can take it. And
All
sorry,
right.
I forgot to share my face. Okay. So on opening the brokerage account, so the brokerage account, there are companies that are licensed by the SEC as brokerage firms to to do the business that they do. So they're able to register you. So first they KYC you and they know exactly who you are. Then when you instruct them that you want to buy equities, they're able to execute for you. Or you want to buy bonds, they're able to execute for you. You want to buy bill, any type of investment product that you want. Once you speak with them, they'll be able to help or get you those investments. And so just and it's good. The last person mentioned, yeah, exactly. So yeah, I was right. They are the middlemen. You want to buy, it's like you want to buy a bag from China and you don't know the way to China. So you find somebody who ships from China and then they get you the bag. That's how it works. So you want to buy treasury bills. The broker will stand in the middle and say that give me your money and let me go and buy the treasury bill for you. Then they get you the treasury bill and then they deliver it to you. That's how it works. And it works when you also want to sell. When you want to sell, you instruct the broker that I bought a treasury bill, I want to sell that treasury bill. And then they sell it to you, they sell it for you, and then they give you that money is transferred to you. So that's how it works. On the second question, which is where to invest, whether to buy it with rural banks or to buy it with whoever. I think first and foremost, you have to figure out why you are investing in the first place. Because maybe you want to invest for the long term, but you are going to buy treasury bills, which will be a wrong investment, right? If you again back to what we discussed, once you figure out that your objective is that you want to do long term, then you have to find that okay, these are the equities. I have to play within the equity space. I have to find um, securities that have the characteristics or have long-term characteristics. So if I want to buy MTN, how do I go and buy the MTN? You have to find a broker who can buy the MTN for you. Now that broker, rural banks don't typically do these investments, equity investments. And so you find a broker, and Blackstar Brokerage is one firm that can do that for you. We find the broker buys the security for you and you have it. And I know the last person mentioned the Blackstar app. So that's one of the ways that you can buy some of these assets. So once you register on the Blackstar app, you are able to buy whether treasury bills, whether mutual funds, whether equities, the Ghana equities, the US equities, or whichever equities that you're looking to buy. The Blackstar app is available and will be one of the places where you can buy these investments. And I would say that instead of not to dampen the bank's business, but instead of buying a treasury bill with a bank, I think it would be better for you to speak to a broker and then open an account for yourself and buy that treasury bill yourself. What we find the banks doing is that the banks will say that they are going to get you maybe 10%. Meanwhile, they may be getting about 15% at the back. This is just an example. Rates are way down now, and so they are not at those levels. But if you buy it on your own, or if you buy these things on the Blackstar app, you get exactly what you see, rather than having the banks rip you off a bit, right? So I would always encourage that. Personally have never bought a treasury bill with a bank. I'd rather do it myself than do it through a bank. So that's what I'll encourage everyone to do. And then the last one, which is the guide on the Blackstar app. That's one of the things that we are currently working on. And once we are done, we have already published a few videos. So once we have the full stack, we are going to share them on our social media platforms so that everyone can have access to them. We thought in building the app, one of the key things was to make it as simple as possible for everyone to go through. So realize that once you go into the app, the first thing you see is your account to see what your investment is, the various goals that you would have created, right? To make it easy for you to figure out to navigate the app. And so we thought it was a basic thing, but we think we need to go a bit more granular, and that's something that we are currently working on. I hope I've been able to answer all the questions so far.
Yes. Okay. So before you answer the three questions, if there are any clarification more on the question, those that ask, you should kindly let us know. But the other three questions that we will take, and then we'll close for the day. I have two in the chat box already, and so I'll ask Benedict to come back with her question so that we add to the two in the chat box. So, Benedict, if you can unmute yourself and ask the question.
Yeah, hello. I think my question have been answered, but I just wanted to find out how can one create a CSD account. And so I was asked to contact somebody as a Black Star Brokerage, and so I think that you've answered that question. But my second question has to do with we know that some financial institution currently in our country belongs to some politically exposed people. And sometimes because of this politics, we know that when their party is in power, they intend to do well. And when their party is not in power, they suffer. And so those of us who have found ourselves with some investment with this particular financial institution, what advice would you give us? Do you think that we should continue, or we should also suggest to protect our investments? Thank you.
Okay, thank you very much. So, Emmanuel, before you answer that question, I'm adding the two. I think they look similar or in the other way so that you answer them together. So the other one was asking, how can they invest wisely? Any advice from you? And also the last one was, why can't one do it by themselves? I mean, I think the person was trying to ask about the broker or something, why they can't go straight and buy the thing themselves. So these are the three questions, and if you can answer them for us.
Yeah, Emmanuel, let me answer the first question and then you can answer the second two, right? Or the second and the third. The first one is basically around PEP, which is politically exposed person and their ownership in
Yes, yes.
companies. And once there's a change in regime, we've seen histories where there's been some vindictiveness, and how could that sort of how can people protect themselves? Well, the first thing to do is to acknowledge is, yes, Black Star is actually such one. Hello, am I audible?
You went off by your audible now.
Yes, you can go
Okay.
ahead.
Where did I stop?
You started answering the question, like, and then you went off. So you can start from
Yeah.
answering the
So,
question.
the question is around politically exposed people and their ownership in companies. Now, how can people protect themselves? The first thing to notice is that Black Star is actually one such company. It was started by Charles Edubuahen about 16 years ago now. He went into government, and the company has been operating without him. In fact, myself, I'm part of the senior management in the firm. I have been there for 5 years and I have never met him. He doesn't even know who I am. But that is still like a legitimate question in terms of what can people do, because in the history of the country, we've seen these things happen. Well, the first thing to notice is that when you do an investment with Blackstar, right, the investment itself doesn't sit with Blackstar. There's a custodian bank. So it is either Standard Chartered Bank, it is either Fidelity, it is either FMB or the Car Bank. So when you do the investment and you buy and sell things, these things actually is held by these banks, right? So in case you find yourself one day where Blackstar or any other company doesn't exist, you can be rest assured that 100% of your money is protected. It's actually a system. It stays with an independent sort of custodian, right? So that is one thing to sort of reassure you that these things are like legitimate concerns. But in Ghana, like in most of Africa, in fact, in most of the world, it is very, very difficult to find companies where there isn't any sort of politically exposed person in those companies, except maybe even some of these banks and other things. But it's a legitimate concern. But for where we sit is like the work we do is quite completely independent to whatever happens in the country, right? So your investment in Blackstar or with Blackstar is safe at all times because it's held by one of the banks. We just get to either make the decision on your behalf, or sometimes if you buy the T bills or Google or Apple shares or Microsoft, that one is in case anything happens to myself, Emmanuel, or Blackstar as a whole, your investment is 100% guaranteed by the bank. That the bank actually holds it on your behalf. So I hope that helps, Emmanuel. You can answer the second and the third question.
Yeah, thanks, AJ. And I think AJ has pretty much covered all of it. So the question from Harrison is, but why can't you do it yourself? So the capital market is a very specialized market, and so every participant on the market has to have a certain level of education and qualification. And so all players within the capital market are licensed by the SEC. So unless you tell me that you are licensed by the SEC, of course you can trade on the capital market, but you need that person to buy that asset for you. You tell the person, and the beautiful thing is that you can tell the person what you want. You can tell the person that, okay, I have 3,000 cities. I want to buy MTN shares, and I want to buy MTN shares at this price. And the person is mandated to do the trade for you at that price. If someone is willing to sell that MTN shares at that price, I don't know if you get it. So you can tell the person exactly what you want. You can tell the broker exactly what you want. What they'll do is they'll go to the market and look for exactly what you want. If they don't find anybody who is willing to give you exactly what you want, they'll come back to you and tell you that, okay, there's someone on the market who wants to sell MTN, but they don't want to sell it at the price you want to buy. They want to sell it at this price. Do you want to take it? If you say yes, they'll go back to the person, and if it's still available, they'll buy it for you. If it is not available, they'll let you know that it's not available. So you can specify exactly what you want to the broker, and that's their job. Their job is to deliver for you. And the last thing was, I think
Any
it was around
advice
this,
on
right?
how to invest wisely?
How to invest wisely.
Yes.
Okay. Again, investing wisely is a factor of what your goal is and the available investments. So in the presentation, I mentioned that you can buy enhanced equity return, which is a good investment, but it may not be wise if you put your rent in there. So though it's a good vehicle, the intention behind it is wrong. It's like saying that you want to give money to an orphanage, and you decide that you're going to steal to give the money to the orphanage. The intention is good, but the source of the fund is not good. That's how it is. So capture what your goal is. Once you capture that, what investment vehicle is at my disposal to fulfill that? So I want to chill. I want 30 December. What investment vehicle can I save in to have enough money for 30 December? You won't, and definitely stocks will not qualify for that because 30 December is just 11 months away. So you want to find an investment that may mature or pay you back by December. So you'd rather buy maybe a treasury bill that will mature in December. That's a good investment so that by the time December comes, the treasury would have matured and government would have paid you back. So you have your money and you can go and do your debt in December. Or you can find a mutual fund, and mutual funds are mandated to pay you after 5 days or pay you within 5 days when you put in your redemption. So when you put in your redemption in December, they can give your money back. They can give your money back to you. But then again, that mutual fund has to be one mutual fund that is within the or invest or the objective of the fund is liquidity and focuses on fixed income securities and not equity securities. Because if you invest in an equity fund, an equity mutual fund like Enhanced Equity Beta Fund, maybe at that point, because it's short term, you may have lost some money on your investment. And so you wouldn't want that. You wouldn't want to face that scenario in that sense. So investing wisely, capture what you are trying to do, your intention or your goal, then align with the investment, and that's when you make a good investment decision. Thank
All
you.
right, sure. Thank you very much. I hope that answers the three people's question. So right now, I wanted to end the question, but I feel like people are very, very interested, and so I have to give them a chance to ask their question. So the next three sets of questions, I have four people, so I'll ask obviously from the top. So Kevin, but before I take the questions, please, the survey link has been shared in the chat box, and I'll be more happy if you can go there and give us your feedback so
So
that we
there was a
will.
question on crypto. I think
Okay, so maybe we'll add that question to it.
yeah.
So yeah, so let me take the three from here. Okay, so Kevin, you can unmute and then ask your
Um,
question.
yes, hi, good evening, and thank you very much. I was going to ask my question and then add Yao's question to my question, because Yao seems to want to hear a lot about the script. Yeah, so mine is so for somebody say who earns uh, a low income and wants to still invest, right? Say maybe does it make sense to say, okay, I'll save say 100 CDs or 150 CDs every month for this period and then invest that money as like a huge income at once, or do I have to? Can I invest 100 CDs or keep buying the stock slowly, 100 CDs, 100 CDs? Like, what's the technique for somebody who is earning either low income or maybe inconsistent income? So like a trader who in this month will earn this amount, next month will earn this amount. How do you go about trading in that? Or how do you go about investing, I mean, in that sense?
Yeah, so you said you add Yao's question, so maybe you can add Yao's question to
Oh no,
it.
so that's the crypto he was talking about. Yao seems to be interested in this crypto. So
Chris, okay. So Harrison, please, you can unmute and ask your question.
Okay, thank you. So when you buy shares and then there is the shares doesn't perform well within the time frame at which you bought it, do you lose all your money or you lose the returns that is on your money?
Okay. Okay. So Harrison, is that all the question?
Yeah.
All right, sure. So Muhammad, you can unmute and ask your question.
All right, thank you very much. Please, my question is, as a Ghanaian who resides in Ghana, is there a way one can invest in a stock market, let's say in Nigeria? Because I think days back we heard very soon Dangote will be going public, and there's a mad rush for people to buy the shares. So, as Ghanaian, is there a way you can buy shares in the Nigerian stock market? Thank you. Because there are some
Right.
companies who like to buy there.
All right, sure. So I'll add the last question so that we take no more. So the last person is Godwill. Godwill, please, can you ask your question?
Hey, good evening.
Yes, good
So my
evening.
question is, okay. So my question is, if I've been investing only in the stock market for let's say about 5 years, and then if by chance I've gotten a business idea or I've gotten a partner to start business, and then I want capital to start that business, what will I do? Will I have to sell all the stocks to get the capital, or there's something else I can do about it?
All right, thank you very much. So before they hold on to the questions and answer them, I would like to remind us that there is this survey link in there that we are supposed to check on and give feedback. I would appreciate if we can do that. Very, very necessary. So, Emmanuel, please, if you can help us with answers to the four
Yeah.
questions.
I'm sorry. The last person, can you take your question again? I would like to start from the bottom, so.
Okay, Muhammad, can you ask the question again?
Okay, so my question was, as a Ghanaian who lives in Ghana, like, how can one buy stocks from other stock market in Africa? So let's say the Nigerian stock market. If you're in Ghana, how can you? Is there a possibility that you can buy stock in the Nigerian market because we heard Dangote will be going public soon? So one might want to take a bite of it.
All right. I think that wasn't the last. The one
That
person.
wasn't the last
Yeah,
question.
that wasn't the last one.
Okay, so the one that asked the last question, can you please ask again? Or
Was it
we,
Okay, sure.
Godwill?
yeah, God's
Okay,
will.
so I was saying, if I've been invested in the stock market for let's say about 5 years, and
Mm-hmm.
then in the fifth year I get a partner or I get an idea to start a business, will I have to sell all the stocks to get a capital for the business, or there's a way around it to keep the stocks and at the same time get capital for the business?
Okay. Okay. All right. Thank you. So, as an investor, right? Once I think the both scenarios are very exclusive. If you're investing in the stock market, it doesn't also mean that you can always raise money on the stock exchange. Right. But it's a very separate from you having, if you have history investing in another company, there's no connection between that. So if your intention is to use your own money to start your business or your seed capital is coming from yourself, and the only way that you get your money is to sell your investments, then it doesn't really matter to the new company they are trying to start, right? For you, you are taking what you have. It's like what you have. An example is that you have a land and you want to start a business. So you decided you want to sell the land to start that business. It's the same scenario. So if your money is not land, but it's stocks on the Ghana Stock Exchange, you sell it and then use it to start your business. But also there are ways to raise money to fund your business. So you talk to a company. An example is Blackstar Brokerage, and they'll advise you ways that you can raise money to for your company or whatever you are trying to do. Then they can advise. If it's something that doesn't won't fly on the market, they'll tell you. If it will fly, they'll give you the advice on how best you can raise that capital. I hope I've been able to answer the question. But I'll go on to the next one. Ghanaians buying stocks on the Nigerian Stock Exchange. It's something that we actually working on. As we heard, we've been able to get into the US markets. Africa is a bit dicey. I don't know how I would say it, but there are more restrictions here than there are when you want to invest outside. It's very surprising, but it's something that we are working on, and very soon we should have Ghanaians have access to some of these markets. But currently, you're able to buy certain bonds. There are Euro bonds that you can buy. So if you want to buy an Euro bond issued by the Nigerian government, you can buy. When I say Euro bonds are USD denominated fixed income securities, bonds that government issue. So Ghana, for instance, has Euro bonds that investors have bought, right, to raise foreign currency for the country. So you can buy those ones are actively traded. You can buy those bonds, you can buy those securities. Only that there's a minimum ticket of just around $200,000. So if you have $200,000, obviously we can do that transaction for you. Then do you lose both your principal and interest when you invest in stocks? So how stocks work is if you go in with I'll use a very good scenario so that you can understand. If you go in with 1,000 cedis and you decide that you want to buy MTN stocks, and let's say MTN stock is 1 cedi, it means that once you buy, you are getting 1,000 shares. I'm not adding, there's obviously transaction cost associated, but I'm not adding that now. So you have 1,000 cedis, you want to buy MTN shares, and MTN is one cedi per share. You buy 1,000 shares. If MTN goes up to 1 cedi 20%, with 1 cedi 20 pesos, it means that for you, each share you made 2 cedis. So you made 20 pesos. So you multiply that 20 pesos by the number of shares you have, and that is the gain that you made. So you would have made 200 CDs. So it means that you had 1,000, or your cost was 1,000 CDs. Now you have it's now worth 1,200. In the same way, if the price drops from 1 CD to 80 pesos, what that means is that now your 1,000 shares is no more worth 1 CD, it's no more 1,000 CDs. It's now worth 8 80 pesos times the 1,000 shares. So now you have 800 CDs instead of 1,000 CDs. So in that sense, you have made a loss of 200 CDs. So effectively, even though we in the equity space, we don't call it principal, but it has eaten into your principal, essentially. But if say you buy MTN and then it goes to 5 CDs, 40 pesos, right? And then it comes back to 3 CDs. For you, you still have gains because it was 1 CD, went to 5 CDs, and then came out to 3 CDs. But net, you are still up. You are still up 3 CDs because now even though your value has fallen, but you are still above your costs. So that is my answer to that one. Then inconsistent income and whether to pile cash in the bank before you invest. So inconsistent income is still something that you can do. So as I said, you invest and then you spend the rest. So anytime you have cash flow coming in, and it's very important for some of these people, some of us who have such inconsistent flow of income, because in when there's a drought or you're not getting business, and so you're a bit dry, you should be able to fall on these monies. So it's important that when you have a boom, you put a lot away, or you set a lot aside, just so you can fall back on it when the market is not too good for you and you don't have a lot of business coming in. So you can look at those instances. So when you have the boom, you split the money again, build up that reserve, which is the emergency fund. If your boom is 20K, maybe you think you need 10K to survive for the next 1 month or 2 months before you think business will come again. Then put that 10K aside in a very liquid investment. Put it in a liquid mutual fund, or a liquid mutual fund that you can take out at any time. Then the rest you can set aside for your long-term investment. Say you buy enhanced equity beta or something, just so you are catering for the emergency side, you are catering for your liquidity side, but also catering for your future investment growth side, right? You are catering for both at the same time. And the question on piling up cash, again, I won't advise that you keep money in your bank, right? Once you have cash coming in, you don't enhanced equity beta and all some of these, in fact, all mutual funds are structured to have, or some mutual funds are structured to have regular investment. So you can put money in at any time. So if you have the money in, if you want to make 100 CDs contribution into EBF now, you can do that. You don't have to pile the cash up to do that investment. No, you can just go in and buy. Even now, you can buy Google shares on the Blackstar app with as little as 100 Ghana CDs. So you don't have to pile money up. Once you get the money, go ahead and buy that investment vehicle that you want to buy. Then the elephant in the room, the crypto question. Again,
That's nice.
I'll just fall back on understand what you want to buy before you do. Understand the
Sure.
risks associated. Cryptos are very risky. Cryptos are very volatile. You see, I'll be very honest. I bought some Bitcoin I think in 2024 February. By March, I was crying, and I bought it around 30, 37 at the time, 37,000 for one Bitcoin. And then I sold it at 27,000 for one Bitcoin. Only for me to realize in December that the Bitcoin was around 100,000. The way I cried. But you need to understand the investment that you're making. So I won't say crypto is a bad investment, but understand the basis for it and understand that there's a lot of risk associated. And so when you're going in, you are going with your full chest that if it goes down by this amount, I'm okay. If it goes up by this amount, I'm okay. Right? Just so when you lose the money, you don't go crying to anybody. You know that you are the one who took that decision yourself. Yeah. Thank you.
That is pretty much interesting. Happy to know all this. So there was this question from Magdan, and I
Okay,
think
sure. Let's take it.
he was asking like, do we have to take loan to do the investment? So I think he himself he knows the answer. I'm sure.
No, no, no. It's not a bad thing. I'll give you an example. Suppose you get a loan. I'll take us back to 2023. Suppose you take a loan from, it's not, it doesn't happen. Suppose you take a loan from someone and the interest rate on the loan is 10%. If you can take that loan, do please, this is no investment advice. Don't go and say Emmanuel Ken said it. If you can take that loan and do an investment that will return you 20%, it makes sense.
Sure.
But make sure that as you lock in the 20%, you are sure that that 20% is going to come back. Or that money that you are putting there is going to come back because you will definitely need to pay back that loan when it's due. So just make sure that as you lock in your liability side, your asset side is also of very good quality. So when the asset side matures, you can go and offset that liability. That's the only thing I can say. But it's not a bad decision. Only that make sure that your asset side matches your liability side. It's like saying that you go and take a loan that is you have to pay back in 1 year, and you go and buy an asset that will give you, or you go and buy a treasury bill that will mature in 2 years. That one is asset liability mismatch because when you have to pay back the loan, your money is still locked up. You don't have that money to pay back the loan. So you always make sure that those things are matching such that the money comes back at the same time the money has to go out. Then what you make is the spread. We call it spread. The spread, which is the amount, the interest that you have to pay out and the interest that you got. So the interest that you got should be more than the interest that you have to pay out, and then you make a spread for yourself. But please, I'm not advising anybody to do that. I'm not advising anybody to do that at all.
That's fine, Emmanuel. Thank you very much. And that brings us to the end of the question and answers. And I'm sure participants has been very, very fortunate enough to have you answer their question to their satisfaction. So before we go from here, I would like Emmanuel and your team to share something about your company or your platform, and also if there's any contact you wish they can contact you on, you can proceed to do that with us.
Okay. So Blackstar Group is an all-purpose investment house. There are two wings to the business. There's a asset management wing, and then there's
Okay,
the brokerage side.
Emmanuel, please, sorry to interrupt you.
Yeah, sure.
Because this platform come with their app and logos and those stuff. Do you mind if you can share any logo of the platform or your app or something so that, for security reason, somebody wanted to reach you and they reach the other?
Okay. Maybe I didn't get you properly. You
I'm,
mean
I'm
the
asking if you
companies?
have any logo, flyer, something that shows your identity, even on app or something, or
As in the
website.
company's identity.
Yes.
Okay, you can find us our website, blackstargroup.ai. Everyone
Okay.
can try it now. Blackstargroup.ai. That's our company's website. So every information that you need on the company is on there. I know maybe a few of you have seen the website, or a few of you actually use our mobile app. Yeah, you can reach us at any time. Our contacts are on the website. If you text, if you call, we will definitely answer your call. As I was saying, the company is a a full-fledged financial house. We have the asset management side that manages mutual funds like Enhanced Equity Beta. We actually manage 6 mutual funds. And if you are using DigiSave on Achieve, the underlying mutual fund there is Plus Income Fund, which we manage. If you're also on Achieve and you use Global Tech, that's also Enhanced Equity Beta on there. And so I believe some of us are already familiar with Blackstar. And so on the asset management side, we manage pension funds, manage mutual funds, manage private wealth, family offices. In fact, any money that you want us to manage, we can manage. That's more on the asset management side. We also have the brokerage side that does more of capital raise. So the person who has a question about raising money for their business, they will handle capital raise, liquidity financing, security purchase and sale. So if you want to buy securities, if you want to sell securities, if you want to any strategy really, we are always happy to advise and lend a listening ear to figure out how we can best help you. If you want to do portfolio advisory, figure out what if you're planning for pensions, what you should put in there. Like the session we had today also is something that we do. Private wealth, we do everything. Anything you can think about with investment, we can do for you. Unless it
Thank
is
you.
the borrowing to go and do the lending, that one
The
there.
LinkedIn.
But that's on the lighter side. But that is black stuff for you. And very recently, our app has been out there, and we're always happy. And there is good feedback that the app is a bit sophisticated, so we need to do a few more tutorial videos to get everyone up to speed. And something that we've started internally, and once we are through with it, we will share for everyone to have a look. Yeah.
Thank you very much. And so that is quite interesting. And I would like us to continue to the next on our list. It has been quite more than an hour, but we still have the people very interested in what we are doing right now. That shows how good you have been in delivering this message. So thank you, Emmanuel, and thank you, Mr. J. For now, if you can go to the chat box and share any information about you and Mr. J, either it is LinkedIn or normal phone number or something that they can reach you on or make connections with you, we will appreciate if you can share that in the chat box. So the next is our programs outline for the next week. And so we have the technical edge, that is leveraging SPE membership, and the technical center or section for career longevity. So here, that is exactly tomorrow. So tomorrow we are having this, and if you want to have access to this link to join it, you can actually contact any of us. And also, we have here the biannual summit, which will happen in May. So we hope that you look out for these webinars and then the in-person events that are on their way coming. We also have February webinar on 26, which is for unlocking energy investment in Africa. Most of you I know are very interested in investing in energy. So we look at how we invest energy investments in Africa. That topic actually explore how to align economics and financial risks for this. There's no flyer for the right now, but it is upcoming. And by 26th February, at same time 4 p.m., we should have that event. So the next on our list is to have a vote of thanks from Isabella, who is the student liaison committee chair. Isabella, if you are there and you can give the vote of thanks as the time permits.
Hi, Senna, can you please confirm if I'm audible enough?
You are loud and clear.
All right, thank you so much. All too soon, our lecture for today has come to an end, or is coming to an end, and it's been a great one. Good evening to us all, and thank you for joining us for today. Our lecture on securities has been successfully delivered on how to save and how to invest in a lot of portfolios and portals available. Lecture has been successfully delivered. We have really enjoyed the lecture. I could see that at a point in the lecture, people were reacting to what he was saying and all that, and it's been a great one. Thank you so much for joining us. We would want to thank the YP and the Students Liaison Committee chairs and team for putting this together. It's been a great one. We would want to thank Mr. AJ and Mr. Emmanuel for having this broader knowledge distributed to us. We are so grateful for that. I also saw our section chair on the call. Thank you, section chair, for joining us. Even though you are not here, we say thank you. And thank you to all of us for joining and making this conversation a great one. I've really enjoyed myself here. I've learned a few things. I've also learned that you all have also learned good things, especially for the fact that we are working to get money. And as we get money, we have to let our monies work for us as well. It's been a great time, and thank you all for joining. Thank you, Senna, for moderating, and we hope to see you guys sometime soon. Thank you.
Thank you, Isabella. That brings us to the end of this event. Bye bye to all, and thank you for joining. See you next time on our upcoming event. Bye.
Thank you. Bye.